The spring buying season is about to get underway. You have agents all over the country who are giving you real-time feedback about what things are looking. This is not a monolithic market. I hear that location is everything. What can you tell us about the state of the real estate industry in the US?
Yeah, we have seen some really good indicators at the end of last year, both in terms of housing starts and in terms of new construction. And, inventory really is sort of the issue to tackle in the housing market right now. We know that, more than 85% of people believe that home ownership is central to the American dream. So that aspiration has not gone away. However, we need inventory. We need inventory to get people into those homes. So, it is location, but it really is inventory. And we see sort of mixed inventory across the country. If you look at sort of the Midwest and the Northeast, we still have really tight inventory, whereas in other markets, we do see loosening of inventory, which is causing more price stability.
Is there anything that gets inventory to increase without actually just building more homes? Would lower mortgage rates increase inventory?
Absolutely. I think, we've talked a lot about that lock-in effect that started occurring because of the historically low interest rates, around post-COVID era, where we saw sellers that were really locked into their homes because they didn't want to give up that 3 or 4% interest rates. So with the loosening of that lock-in effect, we're going to see sellers who are more willing to put their homes on the market, who are a little bit more realistic about prices, right? Because we're not seeing the double-digit year-over-year price increases that we saw kind of, 4 or 5 years ago. And so when we get more sellers to release that lock-in effect, when we get sellers to get realistic about pricing, that's really going to be the other factor, in addition, obviously, to new building, that gets more inventory on the market.
Kamini, that lock-in effect where people, have a low rate and they don't want to move, is it everybody, or is it largely an older population who either maybe retired around COVID or made some decisions, and it's just more to do with demographics than people who locked in lower rates, or is it a little bit of both?
It's everybody. I mean, who doesn't love a 3% interest rate, right? But I think that what folks are starting to realize is that those were historical lows for a reason. And now we are, mortgage rates are about 6%, 100 basis points lower than last year, and very much in line with US historical averages. So I think this idea of just holding on to an interest rate is starting to loosen across all demographics, and people are realizing that there are other reasons to move. Now, you couple that with the increase in home equity and the increase in wage earning over the last couple of years, and folks are really loosening to the idea that low interest rate is the only thing holding them in their home. They're starting to realize that if they do put their home on the market, they can take advantage of some of those equity gains from price increases, and just being more realistic about what rates are in line with historical averages.
You mentioned earlier that I think there's tighter inventory in the Northeast, other areas are looser. Walk us around the country and what you're seeing, and be more specific in terms of markets.
Yeah, sure. So, Texas is one market, Austin in particular, where we are seeing year-over-year price decreases because we've got a lot of inventory there. Florida actually has more inventory this time this year than it did last year, which is sort of an interesting and unexpected dynamic. And one market that I think is fascinating right now is the city of San Francisco. We saw year-over-year price declines around the COVID era in the city of San Francisco. And now, because of the AI boom, we're seeing really strong price increases in the city of San Francisco, both in terms of rent and in terms of single family homes. And I think that that's going to continue to increase. So price increases in that city, but not a lot of inventory. I live in Los Angeles, and we're actually seeing sort of a steadying of the market in Los Angeles. We had historical highs in terms of year-over-year price increases a few years ago. And now we see prices are really steadying out in Los Angeles, and supply and demand are starting to even out a little bit.
In Los Angeles, did the devastating fires last year affect the way that people think about living in an environment such as that?
Los Angeles is always going to be a really attractive city, just the combination of, the weather, the proximity to the beach, the ocean, mountains, the entertainment industry. The fires certainly had a devastating effect on specific communities, but we actually saw, particularly in the high end, that demand that was in the Palisades and Malibu communities that were devastated by the fires transferred almost one-to-one into neighboring communities like Beverly Hills, Bel Air, Santa Monica, Brentwood. And so I don't think that the demand to live in Los Angeles has changed at all because of the fires. We're just seeing a sort of a rebalancing in where folks have moved.
I'm curious to what sellers are having to do. So is it more of a seller's market or a buyer's market, or again depends on the market? And I am curious about when it's new versus previously owned homes, what you're seeing. And I bring that up because Toll Brothers reported after the close yesterday, our own in-house intelligence team writing the post first quarter earnings outlook. First quarter orders were flat, 5% below consensus. It did keep its full year guidance when it comes to deliveries. Management saying January's gotten off to a promising start with most customer metrics modestly higher than last year, though cautioned that it's still early in the spring season. I mean, the spring season is an important one, and I am curious if sellers, particularly new homes, are having to incent buyers, throwing in different things to get sales going, or is that not the case?
For new construction, incentives have not actually changed, and so we're not seeing major shift in the sort of buyer's market or seller's market dynamic with regards to new construction. But to your point, whether it's a buyer's market or a seller's market really does differ around the country, and it really is just dictated by inventory, because the macroeconomic factors around the country are steady, right, in terms of wage increases, in terms of mortgage rates. And so it really is dependent on inventory. So when you look at a market like New England, for example, where we still have very, very tight inventory, that's going to dictate that sellers have a little bit more power than buyers do. However, in a market like Texas, and Texas is very broad, but I'll talk to Austin in particular, we've got a lot of inventory in Austin. And so prices are down year over year about 6%. So that indicates that it's more of a buyer's market, where buyers have a little bit more power at that negotiating table. So, again, inventory really is the thing that's dictating market dynamics across the country, and it very much is region specific.
I'm wondering about compensation for the agents that you oversee. And if we think about the industry, this is one where they're essentially private contractors, right? They're not employed by you. They work for themselves. They eat what they kill. The commissions have been under scrutiny for quite a bit of time. There was the big settlement in recent years. What are commissions looking like in different markets, and is there pressure on commissions as a result of that?
Yeah, great question. So at Coldwell Banker Realty, we have about 49,000 affiliated agents, all independent contractors. And what we're actually seeing is that on the list side, commissions have gone up a little bit. And I think that is because after the massive conversation and the news cycle around commissions, our agents got better at talking about the value that they provide. So at that kitchen table, when you're negotiating with an agent to decide who is going to list your home, which, by the way, the vast majority of Americans have the vast majority of their wealth tied up in the equity of their home. So that is an incredibly important decision. Who is going to help you with the most important financial transaction of your life? Those agents are better able to articulate their value, and consumers are recognizing that, and they're willing to pay for it. And that is what the commission is. It's compensation for the incredible value that the real estate professional is providing. So contrary to what a lot of people assume, we actually have not seen commissions decline in the last year or so. They're actually going up. And I think it really is because of that value that the real estate professional is providing, particularly at a firm like Coldwell Banker Realty.
Kamini, one thing we have to ask you about is AI, the impact. Fortune has a story out from Zillow, citing Zillow's CTO, Chief Technology Officer, and he is saying that AI is reinventing every step of the home buying process, making it easier for shoppers to search for a home and complete a transaction. We've recently seen the AI scare trade impact some of the residential, or not residential, but real estate servicing companies. AI in your world, just got about 40 seconds left here. How is it impacting it so far? And how might it?
Yeah, I think artificial intelligence is an amazing tool to help our real estate professionals use their time more effectively and efficiently. At the end of the day, real estate really is about relationships. It's the most personal transaction that most people are ever going to encounter in their lives. And so that really does require a human at the center. However, AI can make that human more powerful, use their time more efficiently, use data more efficiently, and be more effective in that transaction.
So real quickly, it's an aid. It's not going to wipe out what you guys do or your agents
Absolutely.
do.
No, it is an aid. It is an empowerment tool, but real estate is fundamentally human.